The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations. To determine which investments may be appropriate for you, consult with your financial advisor. Most of us dread tax season. Getting your documents in order, taking note of important deadlines, and the fear that you might owe the IRS can be stressful. In fact, it can be so stressful that it's apparently driving some Americans to tears. A 2024 Cash App tax survey found 54% of Gen Zers have cried over filing their taxes. 1 in 4 say they'll need a therapist to deal with the stress of it all. So what can you do to eliminate the stress this upcoming tax season? Joining me today is Paul Joseph. He's an attorney and a certified public accountant out of Williamston, Michigan. Sounds good. So my first question for you would be, why do you think there's so much anxiety around filing taxes, especially for younger generations?
Well, I think the biggest thing is trying to make sure that you have all the information and that you put it in the right spot on a tax form and that it's accurate and complete. And I think all of that causes a lot of anxiety. People are afraid they're going to make a mistake or that they're going to forget something or, just overlook something. And that causes anxiety to the point where some people just don't even do it.
I wish we would have focused more on it in school because I feel like that's a lot of it. People don't know what they're doing.
Well, I think that's part of it. But, I think that a brief overview in school would probably be a good idea. But it's just like everything else. When you have a little bit of information and you think you know it all, you can get yourself into a lot of trouble. And it doesn't matter whether you're doing taxes or something else. So, I think that giving an overview in school would be a good idea, but I think that helps you just to identify the issues that you need. There's so many forms and there's so many things that are involved in a tax return depending on your own personal issues that teaching it in school is very difficult.
Do you think it's better to file your taxes on your own or hire a professional, or does it depend on your situation?
Well, I think it always depends on your situation. I have clients who prepare their own tax return and then bring it to me, and I do it for them, and oftentimes it's the same numbers all across the form, but they just want somebody to verify that it's done correctly. And then I have others who do their taxes and bring it in, and it's always wrong. It goes both ways. Depending on your circumstances, though, if all you have is one W-2, then you can certainly do that type of tax return on your own. If you have multiple W-2s over, you work 3 months in this state and 3 months in that state, then I think you need a professional.
Are there specific cases or examples when a professional should be hired?
Yeah, I think if you have your own business, all right, and you're on a Schedule C, I think it's a good idea to hire a professional. Whether you're a freelance journalist or a painter or a plumber or an electrician, it doesn't matter. I think it's a good idea to have a professional. Truckers, independent truckers, that's a really, it sounds like it's a simple thing, but it's not. It's an involved tax return when you're dealing with just the guy who drives the truck.
I found a report from CNBC that said 62% of first-time filers say they aren't sure where to get their W-2s or their 1099s. Can you just kind of list what documents people should make sure they have on hand before they file?
Yeah, I think what you need is, obviously, if you're on a W-2, you need your W-2. Now, the employer is supposed to send you one in the mail. And if they don't, they typically provide some sort of portal nowadays where you can download your own W-2. If you're on a 1099, you should get those 1099s in the mail also. And you should have those by the end of January. Now, for other types of 1099s, things like your statement from your broker or your bank or what have you, they have until the end of February to get those out. And those 1099s can be rather involved. And so frequently, if you've got investments, say with Merrill Lynch or somebody else, certainly I think you should have a professional or somebody that can analyze that statement thoroughly, because there's a lot of confusing numbers on one of those statements. But they should be sent to you in the mail. That's the requirement. So hunting them up is not necessarily your obligation. It's the employer's obligation to provide you with that information.
A Fast Company Harris poll found that 70% of Gen Zers say they'd consider using AI to file their taxes, and 44% say they've already used AI to file. What are your thoughts on that?
Well, I think that, if all you have is a simple tax return, right? For instance, I got one W-2. I always worked at this company, and that's the only thing I have, and I don't own a house. I just rent. I do this. I do that. Yeah, it's probably easy to use AI to get that, but there are so many things, even on a simple W-2 return, that AI may not get. For instance, people who are on a W-2 and they have children, they may qualify for an earned income credit. That's a special form that you have to fill out, and then you may not owe any taxes. You may get a refund from the federal government or the state because you're a low-income taxpayer and you're raising children. And I've seen it a number of times where people that have, make $30,000 and they have 2 or 3 kids, they get all of their money back plus an additional $4,000 or $5,000, $6,000, $8,000, $10,000 back. So those types of things, I think that if AI is just like any other program. If you put in good information to begin with, you get a better response. But if you forget something putting it in, then you end up losing things like the earned income credit or not maximizing your deductions. Yeah. I think that it doesn't matter whether you use AI. If you put in good information, when you get it back, I think you still need to go through it because there's things in AI that people don't anticipate.
Yeah. Do you think there's any security concerns at all with filing it with AI and AI kind of being this newer emerging piece of technology?
Well, certainly. I mean, you got to release your information out there somewhere in the web for them to analyze what you have and then send you back your tax return. Well, I mean, it's available out there somewhere, and we all see these security breaches all the time. What's to say that database isn't breached somewhere?
Do you have any tips for first-time filers?
I think what you need to do when you're a first-time filer is you want to make sure that if you are on a W-2, that you have that information. If you're on a 1099, that you have that information. If you have children, you want to make sure you have all of the data together for them. You need their social security numbers and dates of birth. And, once you have all of the information compiled in one area, then you can start down the path of doing your own tax return. If you're a first-time filer, frequently your return is rather simple. But there are situations where you're a first-time filer because you've been in school, and now all of a sudden you have this great job, and they're paying you a lot of money, and you bought a house, and now you have a kid or two, and blah, 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 and things start to complicate. Once they become more complicated, I think you need more of a professional to do it.
Especially because I feel like a lot of people are afraid of getting audited.
Oh, yeah. If you ever get audited, don't ever do it yourself. Always hire a professional.
What are some common reasons why maybe someone could be audited?
Well, there are certain deductions that you take on your return that will cause a higher review at the IRS. So the IRS establishes these relevant ranges where people in your lifestyle, whatever it may be, will have what they think is a relevant range for deductions, a relevant range for income, a relevant range for this, that, the other thing. If you ever go outside those boundaries, then that will force the computer to kick it out where an individual may look at the return, and then they may send you, when you have all of these exceptions, according to the IRS scanning program, those exceptions are going to need to be explained, and that's where audits come from. Typically, if you're in the higher income brackets, those have a higher percentage of being audited. Or if you have a lot of deductions, self-employed individuals get audited, I think, more than W-2 people. It's those types of things. So, the IRS, when they decide that they're going to audit you, they have a goal when they start. And the goal is we need to generate X number of dollars per hour per auditor.
Oh, wow.
So when they look at these things, they see an individual's return, and their exceptions have been highlighted, and they're actually a list of the things that are sent to the auditor that say, here are the 5 areas that we want you to examine. And that will be sent to the taxpayer too, so that the taxpayer has the ability to bring the records to the auditor to prove the deductions or the income or the expenses or what have you. So when these audit notices go out, they're generated from some central office somewhere, and then they're sent to an auditor and they're sent to the taxpayer.
Can you kind of explain what it means to be audited?
An audit is an examination of the figures on your tax return. So let's say, for instance, that you're a Schedule C individual, somebody who's on a 1099. You're a self-employed trucker, for instance, and you have $100,000 worth of revenue because somebody sent you a 1099 with $100,000 on that. You put that on the return, and then you go through and you say, okay, I was on the road 30 overnights, and I get, my room and board and stuff for doing that. And then I have fuel, and I have insurance, and I have tolls, and I have tires and repairs and all these other things. Well, any of those numbers that fall outside the exceptions are the things that could be examined. And they could examine the entire return. Those are called compliance returns. If you get one of those, then it's up to the taxpayer to prove every number on the return. That's a pretty in-depth audit.
Are there penalties that can come from being audited?
Oh, certainly. Anytime you underpay your taxes, you're subject to a penalty and interest. If you go through an audit and the auditor determines that there's the tax due, well, if it's a substantial amount, more than 25%, you can anticipate that they're going to hit you with a penalty.
What happens if someone doesn't file their taxes? If they think, oh, no one's going to catch me, I'm just one person, there could be serious repercussions from that.
Oh, absolutely. If you don't pay your taxes, what they'll do is they'll fine you, they'll penalize you, and they'll charge you interest. But if you don't file your tax return, they could come and arrest you and put you in jail. So you want to file a return if you owe them a return, right? Because not filing a return is a crime. Not paying your taxes is a civil issue, but not filing your taxes is a criminal issue. So you could go to jail. It doesn't happen very often, but it could happen. And if you didn't, the IRS has the ability, to catch you. If you've got a 1099 somewhere, the IRS gets a copy of that. If they try to match those 1099s to the filed returns. If there's not a filed return to match that 1099, they're going to start to wonder why. Now, they can send you a notice and say, hey, listen, we didn't get your 2020 tax return. File it, please. And then once you file it, if you owe them money, they're going to charge you penalties and interest. If you don't pay them, they're going to chase you down, and they're going to keep after you until they collect that money. So bad things happen to people who don't file. So it's a good idea. The IRS, if somebody sends a notice to you that there's a 1099 out there, it could be bank interest, it could be anything. The IRS is going to try and match it up to your personal tax return, and if they don't have a return to match against those 1099s, they're going to try to find out why. The IRS also has the ability to take those 1099s and W-2s and elements of income and file a substitute return for you. And if they do that, you're going to be in the worst shape you ever thought of, because they filed a return that's most advantageous to the Internal Revenue Service. So the government takes it upon themselves to file a return for you because you didn't do it. You're going to end up owing a whole lot more tax than you probably do. And then they're going to turn it over to collections, and they're going to do every mean thing they can to you to collect the money.
And that could probably drop like your credit score and then hurt you in other ways. It could be hard to get like a mortgage or a loan or...
Absolutely, because they're going to do things like file tax liens, and that's going to go on your credit report. And anybody who, any banker that's going to loan you money, they're going to pull your credit report. They're going to check to see where those tax liens are filed. And if you have one, they're going to go and listen, we'd love to help you, but somebody's got to clean up this tax lien first. It really impacts your ability to live if you're not paying your taxes.
What advice would you have when it comes to getting your return? Should you invest it? How should you spend that money, or should you save it?
Well, I think if you get a nice refund, depending on your own personal circumstances, if you have credit card debt, I think you should do something to reduce that and try to eliminate it. But if you're not in debt, then that's a great way to, create an IRA, which is a deduction for the following year. So you could put that money into an IRA, and it would be a deduction for the following year. So, it's a great way to provide capital to you for either, some people buy new cars. You see the car dealers at tax time, bring your tax check down here. We'll take care of it. We'll do this, because a lot of people buy cars, and a lot of people make improvements to their home, or some people just go on vacation. But saving it is probably the best avenue, because you'll never know when you're going to need it.
For people who owe the IRS, is it an issue with like them not getting enough taken out throughout the year?
If they're on a W-2, then that's the problem. They need to increase their withholding, because if they owe when it's over, then they're not being adequately withheld. If it's just a few dollars, I owe $150. Well, that's no big deal. But if you owe $1,000, then you're not being adequately withheld, and you can be penalized for not being adequately withheld.
Yeah. How do people figure out how much they should have being withheld when they're filling out like those forms for their employer?
Typically what you're looking at is, what was my tax liability the previous year? So if your total tax liability based on your income last year was $10,000, if you withhold at least $10,000, the same amount that you owed the previous year, and that's not adequate, you won't be subject to a penalty. There's an exception to that, but the additional tax that you owe must be paid by April the 15th. If you file an extension for your tax return, it's an extension to file, not an extension to pay. So if you file an extension and you owe money, then you're going to end up being penalized because you paid past April the 15th.
That's probably a common misconception, is people think, oh, I don't have the money to owe right now, so I'll just file an extension and I'll have more time to come up with it.
Yeah, that's not the case.
So what would your 2 cents be when it comes to filing taxes? What do people need to know? When should they file? How do they protect their information?
Well, I think the first thing you need to do is to get organized. And by that, I mean, gather up your W-2s, gather up your 1099s, gather up your broker statements, gather up all the information that you have with regard to income. Put it in an organized fashion, and then start down the path of, now what are my deductions? Did I pay property taxes? Did I pay income taxes to the state? Do I have other types of taxes that I paid? Do I have medical bills? Do I have other types of deductions? Interest on my mortgage? Things like that. Get all of that information organized. If you're on a Schedule C as a self-employed individual, such as a journalist or a trucker or somebody like that, you want to get all of your expenses organized and in a nice, neat fashion so that it's easy for you or for the tax professional to go through them, examine them, and put them on the return in an organized fashion, and then get your return in a timely fashion. If you owe money, pay your taxes. Your taxes are due on April the 15th. File them by then. If you need an extension, try to estimate if you owe money and make that payment on April the 15th so that when you do file your return, you can include that additional payment in a timely fashion to avoid paying interest and penalties.
All right, that does it for this episode of Not Your Father's 2 Cents. Sources used in this episode will be linked in the description. Remember to file your taxes by April 15th to avoid penalties, to avoid interest. Don't want that to happen. Thank you so much for listening, and I'll meet you back here next week.